All right, so the market hit some fresh all-time highs, but then it tapped the brakes today. The S&P 500 slipped just a bit, down 0.3%, to close right around 69.42. But it wasn't a total bloodbath. The Dow actually managed to eke out a tiny gain. We're talking 0.1%, setting another record high. Still, the overall feeling out there was, well, pretty cautious.
So why the long face? What hit the pause button? Well, the big culprit was this really discouraging new report on U.S. retail sales. It basically just stalled out. And as soon as that news dropped, you saw traders immediately betting that the Fed's going to have to step in with some rate cuts to keep things from grinding to a halt.
And all of that uncertainty, it means today was definitely not a rising tide lifts all boats kind of day. Nope. This was a stock picker's market, all about individual company stories. So let's get right into the three big ones that you really need to know about.
All right, first up in our deep dive, we're talking about a real titan of finance, S&P Global.
Yep, the ticker is SPGI. And boy, were they in the spotlight today, but for all the wrong reason. And wow, the move today was just brutal. Shares absolutely plunged 9.7%. I mean, that made it one of the biggest losers of the day, period. This huge drop came right on the heels of a really, really disappointing profit forecast.
But here's where it gets really interesting, the why behind the drop. The whole story here is about one thing, fear. Investors are seriously spooked that these new, nimble competitors, powered by AI, are starting to eat S&P Global's lunch. That big, powerful moat they've had for decades, their credit ratings, their market intelligence, well, all of a sudden, that moat is starting to look a little leaky.
Wait, so you're saying the very same tech that Wall Street is obsessed with is now coming for the market's official scorekeeper? Exactly. A little bit of bitter irony there for sure. Okay, so let's shift gears. We're going from the world of high finance data to a classic consumer staple, a stock that's usually considered a safe place to hide when things get choppy, Coca-Cola.
Yep, the ticker, KO. And even this absolute giant wasn't immune to the jitters today.
The stock slipped about 1.5% right after their latest earnings report. This was just a classic textbook sell the news kind of reaction. And the reason why is super important for what it tells us about the whole economy. See, Coke actually missed its revenue numbers. And even more telling, they gave a really cautious forecast for 2026. This is a massive signal, you guys. It's telling us that after months and months of just eating higher prices, shoppers are finally saying enough is enough. The consumer might just be tapped out. Even the most defensive stocks aren't immune. That is the absolute key takeaway. But in total contrast to all the struggles we saw in tech and with consumers, there was this really unexpected bright spot over in the industrial sector, DuPont. We're talking about the chemical giant, ticker DD, and they just delivered a story that the market absolutely loved today. I mean, while so many others were bleeding red, DuPont rallied, get this, a super strong 4.9%. Just a total standout performance on a day like today. So what's the deal here? Well, in a market that is just completely obsessed with software and chips and AI, good old DuPont comes along and proves that the old economy is still very much alive and kicking. They dropped a classic beat and raise report. That means better than expected results and a bullish forecast for 2026. This could actually be a little hint that the whole industrial cycle is finally, maybe, turning a corner. A good reminder that the real world still runs on physical stuff.
Couldn't have said it better myself. All right, so let's tie this all together. We're going to give you the exact lines to use at the water cooler tomorrow morning. Here's how you sound like you know exactly what's going on.
Okay, when your coworker asks about S&P Global, you say this. Did you see S&P Global tanking today? It feels a bit like the Terminator. Investors are terrified that AI isn't just coming for copywriters anymore, it's coming for the heavy-duty financial data terminal on your desk. And when the conversation turns to Coke, here's your line. Coke missing revenue is actually a pretty scary economic signal. Usually people will give up a lot of things before they give up their Diet Coke. If that sales volume is dropping, the recession indicators are flashing yellow. Finally, for that surprise winner, DuPont, you hit them with this. It's kind of funny while everyone is panicking about tech earnings, good old DuPont is quietly up 5%. It's basically the market reminding us that we can't actually live inside the metaverse. We still need physical stuff to build a real world. So that leaves us with one big question to chew on.
When the world's most defensive stock starts slipping, what does that tell us about the consumer economy?
Comment below. Subscribe to Market Fluency for your daily edge.